All right, how's it going, everyone? Welcome to another episode of Forward Thinking Investors, where we talk to investors about all things investing. Today, I'm very excited to be talking to Katelyn Donnelly, who's a founding manager partner at Avalanche VC. Welcome to the show. How's it going?
Thanks. Great. Thanks for having me.
Yeah, excited to have you on. I'm looking forward to diving into all things investing with you. I think for my first question, love for you to just give kind of a high-level overview. What is Avalanche VC? What do you like investing in? And just give us that overview to start this off.
Yeah, so Avalanche is a pre-seed seed stage fund that is highly opinionated. So we look for things that we call avalanches, so invisible trends underneath the surface, and that set up a situation where you could have massive sector change. And our verticals that we look at right now are how people learn, earn, and own. So like EdTech, future of work, Web3, some like long tail business SaaS products.
Cool. So my next question is, every VC, anyone that manages some sort of capital, they have like a journey of how they got to their thesis. They obviously didn't just decide to start this and pull something out of the hat and come up with this. So I'd love to hear kind of a dual, how would you kind of get into investing? And then kind of at that same time, how would you end up on your current thesis? What's the journey that you walked down to land you on, where you're currently at?
Yeah, well, it's, I think every investor's journey is personal and lifelong. So I remember, I've been a lifelong investor and student of financial markets, including in high school, thinking about managing my own money and indexing to Vanguard. And I, went to Duke for undergrad, studied economics, thought I was going to go work on Wall Street, and actually interned at Morgan Stanley in their sales and trading division, and wrote my senior thesis on Vanguard International Mutual Funds. But I graduated in 2008. And so, I kind of looked at the economic environment at that time and thought, maybe there's other things I should do instead of going straight to Wall Street. And I was president of the student union at the time, which was the largest student body on campus. And so, I was thinking to myself a little bit more like a CEO or an operator. So I interviewed and got a position at McKinsey in their San Francisco office and worked there instead. And so I joined McKinsey in 2008 and did finance and tech across Silicon Valley, a lot of liquidity stress tests for banks, cost cutting across tech companies. And then in my third year, I did some work with the global head of McKinsey's education practice, Sir Michael Barber. And he announced that he was leaving McKinsey to join Pearson and asked if I'd be his chief of staff. And so Pearson is a large traditionally a publishing house. We own the Financial Times, Penguin Books, a lot of textbooks. But the CEO had this vision to become a global education company. And so I joined first to design Pearson's global efficacy strategy, so how they measure learning outcomes across their suite of products and services. And then I'd always wanted to get back into investing or financial markets. And so I saw the opportunity at Pearson to found their corporate venture capital arm and get involved with advising on some of their LP commitments and corporate M&A, and ended up founding the fund and running that for 5.5 years. So that at the time was focused on education and EdTech, and I loved being an investor. I loved leading rounds. I think that investors that can invest with conviction can create self-fulfilling prophecies that move the world forward. And I published a bunch of strategic papers at that time, and one of them was called "An Avalanche is Coming: Higher Education and the Revolution Ahead." And it predicted the rise of Coursera, the importance of the Thiel Fellowship, the use of Y Combinator as a more important credential than an MBA. And so then, I was doing corporate VC and realized that I was always going to be an employee of Pearson and be beholden to their corporate agenda, which would change, periodically. And that just wasn't for me. So with Sir Michael Barber, my mentor, we had been kicking around an idea for a long time about building a firm that would work with governments to drive big reform programs, so similar to the work we were doing at McKinsey. And we decided to start that and build it full time. And so I started Delivery Associates with a couple of other partners, and that's now a global business, employees on 6 continents, 250 full-time members, clients all over the world. and I'm on the board, but I always wanted, like, was trying to get back to venture. And so luckily, that's been a very successful business and I've done well. And so I started angel investing about 3 years ago. And then I rolled some of my angel investments into Avalanche Fund One and focused on companies at that time that were transforming how people learned, earned, and lived. And kind of, wanted to do some ed tech because that was my background, but wanted to be more expansive. From building delivery associates, I'd seen that there was, it was a remote first company, and there was a whole series of infrastructure that you would and software that you could put in place to manage a remote workforce. And then I, saw a lot of changes in how people could go from being gig economy workers and freelancers to really thinking of themselves as entrepreneurs and running their own micro businesses. So I wanted to invest behind that as well. And then the ethos of Web3 and crypto were always very appealing to me. Having started a government consulting firm, like governance and public goods and how you think about yourself as a citizen was pretty core to the ethos of the crypto movements. And so that was a space that I had a network in and deep interest in, and wanted to bring all of those three themes together into a fund. And so Fund One was kind of the demo, get into many deals, build relationships with founders, show a track record outside of Pearson. And then Fund Two, which I've just launched, is doubling down on that strategy in a much more like institutional, systematic way where we can lead deals and, take bigger ownership stakes and work with founders full time.
100%. So let's kind of go off from there. So let's say you meet a founder or someone's listening to this, right? And they're like, oh my gosh, like I'm totally building in this thesis area. And let's say they get a meeting with you. Like when you meet a founder, what are the things that you look for, when you are looking for like the perfect investment opportunity? Is it market, is it founder, team, product, like other stuff? What are the things that are most important for you at this stage in the investing journey of a company?
I think you look for, or I look for, well, one of the questions I ask, but this isn't necessarily always the first question, is like, why do you care? Like, why you? Why this idea? Because I like to invest in people who what they're building is their life's work. They have a personal commitment to it. They believe that they can make a dent in the world. I'm not interested in investing in founders who are like, well, I thought my next career step was that I would, found a company and then I might be a venture capitalist, but I really just want to found a company first. Like, I'm looking for people who are deeply passionate. And then secondly, and usually how I end up meeting people is I write these blogs called Obviously the Future about avalanches that I believe are happening and like over the next like decades long changes. And so usually we have a shared worldview around that avalanche and belief in the way that the future is going to be. And so the founder, really cares. We have shared alignment about that vision, and then they are equipped to be able to build behind that. So whatever their product is or their like company idea, they are able to show that they're building and they can continue to build the solution to the opportunity.
I think that last bucket, at least in my experience, every founder in the world that wants to raise money thinks they're equipped and ready, but they may not know what they don't know about this industry of building billion-dollar companies. I'm curious if there was let's call it a first-time founder, really raw, really ambitious, smart, but they came to you and they were just like, we're raising money potentially in the wrong way for a first-time founder. Like, what are things that you wish people that had big ambitions knew about raising capital that they may not know off the bat that could actually be hurting their chances of raising like in the short term if they, didn't know these things?
I think that there's no such thing as overnight successes, and that often, like if founders are coming to me and they're really raw, they probably think that, oh, I'm starting a company, I should go raise a round. And the reality is it's like, well, you probably should have been like kind of starting that company maybe like essentially 2 years maybe before you like quit your job. Like you might go be an employee number one or like an early employee at sort of in a similar space, be like gaining skills while like working on your business plan on the side, or maybe you've taken gotten grant capital, and then you're going to go out and raise venture money after you have some serious traction. Like Delivery Associates, the company I founded, we never raised money actually. So like I have like the view of being a founder that hasn't raised venture capital, and we bootstrapped it, and part of that was by signing contracts before hiring people and generating expenses, and I see that work out very well. And so I think it depends on the founder. Like some teams have been thinking about their ideas for a long time, or they're like a natural extension of what they've done before, or like most of the EdTech companies in my portfolio, like one of the ones that's done particularly well is called Prisms of Reality. Their math curriculum in VR. I wrote an investor support letter to the founder to get a National Science Foundation grant. Like she was building the company 3 or 4 years before she got venture capital funding and took on a $1 million+ of National Science Foundation grants. So I think that's one of the undertold or underappreciated pieces of most stories is the amount of time before you put fuel on a fire with venture capital that people do a lot of R&D.
Totally. I can relate to that, through multiple companies. I've now been in tech for 8 years, and I've just you see a lot in a cycle of 8 years. And it's just thinking back when I first started in 2014, I was totally in this category. Oh, got an idea. Let's raise millions of dollars. And it's just funny looking back how naive, that mindset is. But everyone starts, everyone has their day one, which I think is the fun thing about venture and startups. Like everyone has that first day when they don't know what they don't know. And then depending on how long they want to walk down the journey, they figure it out what's actually going on.
Yeah, absolutely.
I'm curious for you, what is, now you obviously have your own firm. You were an angel investor before then, and then you were at Pearson before then. Has anything changed in kind of your day-to-day in investing? Or I guess the question is, when you're leading the fund over at Pearson, now what you're leading your current fund, is your day-to-day pretty much the same, or is it differ because it's your own firm this time?
Well, it's a bit different because when I was at Pearson, I took board seats. And so I spent a lot more time going and visiting portfolio companies and serving on the board. And now I invest at an earlier stage where I'd say I still do the same things of working with founders, and in fact, sometimes more intensively, but not at that sort of same cadence. And then, having limited partners and raising a fund is especially as a new manager in a difficult economic environment is not trivial. So I probably spend a lot more time on at Pearson I was like a sole LP basically, and so I wouldn't say I didn't spend time managing my sole LP, but now it's a different dynamic where you're have many different stakeholders who are investors in your fund, and then also I'm doing all of the back office admin myself as well. I have an administrator, but you're still, managing the administration of the fund and filing the paperwork and making sure your tax, people who are going to do the taxes are all lined up. So that's quite different.
You mentioned something there that I think is underappreciated in the founder community, which is managing relationships, having relationships with LPs, making sure the relationships stay strong. Here at Seed Scout, which is my full-time job, the podcast is more of the side thing. We're all about networking and relationships and everything. And, a lot of the founders come in thinking, oh, let's go to Seed Scout, let's raise capital, and let's go back to building the company. And I need to communicate to them, no, it's actually you have to build relationships. It takes time. It's not transactional, and it's going to take work. I'm curious for you, do you have any advice for founders, maybe, specifically out of network founders that aren't used to building relationships with investors? How can they better I guess, do that and not necessarily raise capital, but just like, how do they start building up their friendships and their relationships with people that cut checks? So in a year or two or three, they have people to text saying they're fundraising. Do you have any tips there?
Yeah, I think that they could, like, getting the timing right is important, because if they're way too early, then I think it's hard for a VC to engage. So I find myself now, I also think that they have to realize that it's, especially at small funds or like solo GPs, like you go in your own cycles. So like 2 years ago, I probably would have taken, if you reached out to me and were like, I want advice, or I'd like to talk, like I probably would have taken the meeting because I had time. But now, especially because I'm fundraising myself, I just don't have time to like take any meeting unless I'm pretty serious about it. And the other thing that I've been doing is doing more asynchronous evaluation of investments or discussions with founders. So like you can get a lot out of a video, like a Loom video, or like newsletter updates. I write, many newsletters actually. So, and I think that's a great way of keeping in touch with people. And I think that you kind of need to do those sort of like asynchronous stuff to keep on people's radar and build a relationship. Yeah. And then I think you have to be realistic about like where you sit in the ecosystem. If you have kind of an idea and not a lot of traction, then it's going to be like, it's hard for an investor to spend a lot of time on that. So you have to try and find the people who can give you that time, that are not going to be maybe your dream investor from day one when you start out.
That's such a hard lesson to learn for founders. Like someone in Phoenix, Arizona might see someone in San Francisco who's a background working at Stripe and a VC firm raise a ton of money. And the founder's like, oh, they can do it, I can do it too. And, there's some element of self-awareness and kind of being like, okay, but like, what are the facts here? Even if they're not fair, oftentimes they're not. But, I think realizing where you, like you said, where you sit in the ecosystem and being okay with that, and then trying to work up and work with what you got is like the number one thing I help founders figure out, like, because mostly founders think they're farther than they are. And as soon as they realize that they are where they are, now move up is kind of where they start progressing, in my opinion.
Yeah. Yeah. I mean, yeah, it's true for funds as well, right? So yeah. Like often very similar.
That's another thing too. Like founders, like, I guess the question is, a lot of times us founders are like, oh, this VC said no, or this one ghosted me, the VCs are, we sometimes get angry at VCs, not realizing that VCs actually have like a very similar job to founders. They're just a kind of a level up in the stack. What are the things that you wish founders, specifically first time early founders, knew about the role of a VC that maybe they don't know, that if they did know, they would have a little more empathy towards the role of a capital allocator like yourself?
Yeah, I guess one is that you are under a lot of pressure to demonstrate returns and good judgment and be a steward of capital. And in fact, like the less established you are, the more that is true, right? Like, so for people like me, the scrutiny is going to be like 10 times higher than it is for, pick your brand name special VC, like, and so that makes it makes it a high pressure environment. And then I think the other thing for founders is venture's not for everyone. And I would say that the last 2 years have been truly like exceptional, with interest rates at 0 and COVID and just like money just flowing out into the ecosystem. And that's obviously changed this year, but probably going to continue to change, of just like less capital for venture backable startups. But there are so many other types of capital out there, or like ways to start a business. And, as I said, we started our business bootstrapping and never raised any money, and you can have a great exit and outcome that way. And so I think that, people should think a bit more about that.
Totally. I completely agree. I think for one of my last questions is like, what are the avalanches that you're looking at now into the next decade are there certain trends that are happening that you're excited about? Or even more specifically, are there avalanches just getting started that you think are just like really early that you think in the next 5 years are going to lead to like fantastic investment opportunities?
Yeah. One of the ones I'm working on right now is called edutainment that works, which is, I used to be really negative about what, so what does edutainment mean? Usually it's like entertainment that has some sort of education quality, but really the education was an afterthought. So it was a term invented by Walt Disney, and kind of like talking about, watching videos, right? But we all know that videos alone don't lead to education outcomes. And so I think we're going to see a lot more like gaming in education, like immersive environments in education. Gaming is now the like largest category within media. It's like a $250 billion a year industry, 2.5 billion people are gamers, which is half the planet. So I think that that's super interesting. I'm a huge fan of no code and low code. I think that makes everybody a entrepreneur. It really lowers the barrier. So both of those, no code and low code, and everybody's an entrepreneur, are two Avalanche themes, which is that you're either going to be literally an entrepreneur or you have to act like one within a corporation. I think we see more and more people who are freelancing, doing side hustles, like working on liquid super teams, running their own micro business, but then they need the software to be able to kind of have that leverage or autonomy to run their businesses. And then the other one is, we don't have like the perfect tagline for it yet. I kind of want to call it skills, skills, skills after like bills, build bills. But as AI has leaped ahead and we've seen these amazing bumps with, machine learning and Donnelly and GPT-3, human learning has to keep up, right? And in some ways, it makes it much easier for people to do tasks that are kind of tedious, like writing or, designing an image potentially, but that can lead to de-skilling, and means like, how are people going to be able to make the leap from amateur to expert to be able to actually, have original ideas that an AI couldn't write, or have art that is totally new or be able to do things with that art. And so that is a huge opportunity for sort of lifelong learning and investment into human capability to go alongside machines.
So to kind of round us out, if there's any founders listening to this and they're like, oh, like that's what I'm building, right? Like this is totally up my alley. Like, are there ways people can connect with you online? Do you have a website? Do you have a Twitter presence? You mentioned you have a newsletter. How can founders kind of connect with you in a way that you like people to connect with you, in a way that jives with you, whether it be newsletter subscription or followers or anything like that? How can people connect?
I think Twitter is the best, as well as newsletters. Like I would read Obviously the Future, and then I have a weekly newsletter called Declarative Statements, because I engage best on ideas and content. And so if you're like, oh, I really love this Avalanche, like, have you read this article? Have you seen like this? That's like the best way to engage me. Like I love when I see a pitch deck and there's a stat that I've never seen before, or like an idea that then really fits with a theme. And one of the things specifically I've been on the hunt for is $1 trillion facts. So, if anyone has like $1 trillion fact, like something that creates $1 trillion of impact, I'm always interested in that.
All right. Well, if you have $1 trillion fact, you know who to go to. Katelyn, thank you so much for coming on to the podcast. I love your thesis. I love everything you're doing over at Avalanche, and I wish you best of luck getting 100 decacorns in the future. Thanks for coming on to the podcast.
Thanks for having me.